What's going on, guys? It's Day Trade Bully. I'm your host, Renato Fabri, with my co-host.
What's going on, guys? I'm Raul Quinones.
And we're super excited to bring this concept to you about taxes. But before we do, please make sure you give ourselves a like, comment if you enjoy, and that will help us grow and more people will learn about us so you guys can get more information about anything. Now, without further ado, let's get into this concept of taxes in the cryptocurrency or cryptocurrency market. Now, first and foremost, we're not accountants. We're not giving you any type of advice as to what you have to do. But here are what we've learned talking to accountants and what we should be doing. So we first could start about short-term gains and long-term gains. Do you want to get into that?
Yeah. So like Renato was just saying, we are not tax professionals. I'm basically reading off notes that I've done research on myself, and I definitely recommend going forward, if you're going to be trading tax or even just holding it to look for long-term gains on it. Definitely do your taxes, and we're going to go over that a bit. So, first things first. The first thing that that you want to see when you do your taxes is whether your whether your trade was a short-term or long-term hold. Mm-hmm. Now, that's going to basically change the percentage on what you get taxed. Now, let's say a short-term basically means anything less than a year, right? If you hold it for less than 1 day of a year, you get taxed as a capital gain, which mm-hmm. the tax is going to be a lot higher. And the tax will vary on the dollar amount and also the file code and as well as your state. So like I said, definitely talk to a tax professional. Mm-hmm. But just know that if you're going to hold it for less than a year, you're going to have to pay higher tax on it as a capital gain. That's with anything, whether you're trading Forex, cryptos, any investments, anything less than a year, you have to pay capital gains on. Now, long term, that means a year or more. That's it. So a year or more, basically, the percentage is going to be a lot lower. It's what is it? And a cool thing too, if you don't make any income, this is something I just learned as well. So let's say you have no other incomes and you profited less than $70,000 in that year. You actually pay no taxes on it, but you have to hold it for more than a year. So that's a cool thing about, to know. But if you do if you do have income coming in, of course you're gonna have to pay the long term, which is gonna be a lot smaller. So definitely talk to your tax professional. Mm-hmm. Percentages are gonna change, on your state, on your file, your file code, exactly. And also the dollar amount, because if you only made $10,000, then they're not going to tax you 40%. It's going to be less. But if you made $100,000, they're going to tax you more. It kind of sucks, right?
Yeah. But do you want to talk about when someone exchanges, like let's say they bought Ripple or Verge, and now they withdraw it into Ethereum? That's now considered you're taking profit. So
yes,
that's like. There's no component where you're still holding on to it on a long term.
Correct.
So
basically, what Renato, what we're gonna go over on that is basically saying you're gonna only pay taxes, or the term would be on the actual holding. Like let's say if you buy Ripple and you hold it for a year or more, you held it for a year, so you'll get taxed on the long term tax, right? But if you take Ripple and then exchange it for Ethereum, you actually cashed out and you have to pay on that profit.
Exactly.
But you only pay on the profit, right? Especially if you already, let's say if you're using your own income money, you're already taxed on that income. You won't get taxed. Let's say if you buy Ripple at 20 cents and you sell it at $2. You're going to only get taxed on the 180 that you made, not the 20 cents that you bought it at, right?
Yeah.
So, that's very important to know. A lot of people think that, as long as you don't put it into a cash or back into your bank account, you don't have to pay taxes on it. Well, guys, sorry to burst your bubble. Sorry to crush your dreams. Um, Listen, IRS is not messing with this.
Absolutely not.
They're not messing with this. I mean, to the point where they hired, um, uh, basically they hired a company called Chain Analysis, and they spent over $3 million. And if you don't believe me, do your research.
Yep.
They're not messing around, like, at all. And you're better off going to them, paying your taxes right in the beginning, than
Trying to just hold on
thinking
to
that
it.
you're thinking that you're gonna get away with this, and later on they're gonna catch on to it, and now you got to pay
fees on top of
20% more than you should have. That's basically, they'll hit you with tax evasion. In tax evasion, there is no what's it called?
Counter to it.
No, there is no statute of limitation to that. So you can be 80 years old, 60 years from now, and let's say they decide to go through you and audit you, they can go all the way back to 60 years ago and still catch you for tax evasion. That's how Al Capone got caught. So all the crime that Al Capone did, and he got caught with tax evasion because he was basically living in mansions, living the high life, and he was only put in that he was making $10,000 type of deal, back in the day. So it's definitely something you want to keep track of. Definitely want to talk to a tax professional. Take charge and make sure this happens. You have this going right for you
from the beginning, from the start, because you don't want to say you get audited and they say, listen, you owe us this much. You now have to prove to them, or you're proving to them why you owe that much. Where if you already present what your taxes are, they now have to prove to you why that is false. So It's so much easier for you to just take your diligence and actually do it. Do you want to say what website we recommend for them to keep track of their taxes?
So you can go to Google and search up Bitcoin.tax, and that's a program that you can actually go through. Again,
very cheap. So it's $20 a month, and it'll keep track of all your trades, and it's the best way you could actually do it without you physically doing it by hand.
Yeah, so I mean, it's very good. Definitely, still have a tax professional do your taxes.
Yes, 100%.
Especially now, this is one thing. I've been trading for a while now, so I actually had to go search through a lot of tax professionals and find a tax professional that knows about trading. There's a lot of tax professionals that know about businesses and stuff like that, but not many people are traders about the capital gains. Like there's different files, sections that you can file when you're trading. So definitely find the correct tax professional that knows trading to save you the most on the taxes, right? So let's see. Let me just go through the notes real quick, see if I left anything out. Oh, one thing too. Anyone that's been mining. Now mining, you have to get taxed on, right? And the tax on that is basically self-employed. It's basically like you have a business, right? So again, talk to a tax professional. You might have to set up an LLC, whatever the case might be. But if not, you can just do it as self-employed. Once you get taxed on the mining amount as a self-employed, now you start trading it. Now it becomes a capital gain if it's less than a year, or a long-term gain if it's more than a year, of course. Let's see.
I believe that's it.
That's pretty much it. Guys, I can't stress it enough. A lot of people have been getting away with not paying their taxes when it comes to the crypto world, and everyone says, "Hey, it's anonymous. Don't worry about it." This and that. Third, guys, I can't stress enough. They're not playing around. They're not playing around. Look, you can even do some research and look at how they sued Coinbase and basically told them that they need that IRS sued Coinbase and was like, we need all your records. We want to find out everything. So they're not playing around with this. They're gonna get you. If I mean, you might,
within a year or two, but it's so much better to just do it now so it doesn't bite you in the butt in the future. And then if it does bite you in the butt, you're now paying. You now have fees, you now have penalties, and you also have that 20% more that you had to pay because it's a tax invasion.
Yeah.
So just do your diligence. Make sure you just talk to a professional, and you'll be set. It's just like capital gain, the stock market, or the foreign exchange market.
All right, guys. So that's all we have for taxes. If you have any questions, definitely leave a comment below. And I don't have anyone to recommend at the moment as a tax professional, but maybe we'll look for someone that we can have
We'll just
show.
come together, and he could come and
explain more. We'll try to find someone that can explain more, and we can recommend someone to you guys as well. So with that said, guys, don't forget to hit the subscribe button. Don't forget to like this video if you like it and you think it's very informative, and leave the comment below. Oh, don't forget to hit that bell notification so you get notified the next time we upload videos, guys. Anything else?
That's about it.
You guys have a great day.
I'll see you in the next one.